quite a bit of action in today's market. Let's bring in, along with Adam Shapiro, Tom Lydon. He's ETFtrends.com editor and Global Trends Investments president, who says now is the time to get into emerging markets specifically. We have Randy Warren, Warren Financial Services Chief Investment Officer, who says there is one particular sector you should absolutely be buying right now. He'll tell you. And Chris Gersh joining me from the CME. Chris, I need to get to the feel of the pits. Was there any panic selling, any orders that came in at the last second just to dump out, or was there pretty much some calm here?
Liz, there's absolutely some calm. We have low volume and low VIX right now, right about 12 on the VIX. That tells us traders that although there was some selling, it wasn't a huge pullback, only about 0.6% in the S&P. So no panic selling. A lot of traders thought we'd sell off a lot more with that spike in oil. The sell-off just didn't come.
Well, let me go to Randy. You just heard him say we have low VIX. I mean, you think the market's going to be up at year end about 10%, yet you still think investors need to hedge. Why?
Yeah, I think it'd be a wise thing to hedge. We use a volatility hedge for our investors and in some of our funds. So, you know, it's pretty smart to hedge your bets a little bit. You know, you don't know what the next catalyst is going to be for the downside. So, you know, we don't want to sound like we're overly cautious because we are optimistic. But still, it's always good to have a plan when things don't go your way. And right now, you know, what's happening over in Iraq and what's happening with oil prices is causing a lot of things not to go the right way.
Okay, then I take it to Tom. Tom, where do I put my money so that it goes the right way?
Well, Liz, you pointed out earlier emerging markets, and take this pullback and any pullback we've seen this year as an opportunity. There's great value there, and although traditionally emerging markets have seemed risky, it's not really the case. Debt to GDP is half of what we're seeing here in the U.S., and there's some great ETFs. Wisdom Tree, DEM, is an outstanding choice. And also iShares has an MSCI emerging market low volatility ETF, both blue chips, both high dividends.
Okay, hold on. Let's talk about DEM for a second. Its title is Market Equities Income Fund. Are these emerging market names that have good dividends? Describe what's in here.
Exactly. So blue chips, but also you don't often think that emerging markets are advanced enough to pay high dividends. The folks at Wisdom Tree have really dealt down closely into this index in putting in individual equities that not only are performing well and are valued in the right place, but continue to kick off regular dividends.
Hey, Randy, I'm curious. I know that you like American Airlines, you know, Conoco Resources, Pioneer Natural Resources. Two questions for you. Why do you like American, but also on energy? If we get the spread growing between Brent and WTI, wouldn't it be better to invest specifically in energy companies that have exposure to international production as opposed to those here at home?
Yeah, we like the energy companies right now. Energy sector is a sector that's been largely ignored over recent years, and there's a whole renaissance that's going on in the energy industry right now. So the American companies are doing really amazing things with the new technologies that they've brought forward and the ability to open up reservoirs that you know, haven't been able to access over the recent years. So, you know, Concho Resources and Pioneer, these are good companies that allow you to get into that kind of a business. And the story on the airlines, although they tend to move in opposite directions today, isn't really all about energy. The airline story, this is an opportunity, this is a sell-off today that gives you an opportunity maybe to get in because perhaps you've missed the 100% move that's happened in the airline industry for the past year or so.
Okay, but you're mentioning all these energy names. Most of them were higher today, but if things start to come down,
Yep.
Do they then go lower? Is this the way to pick some really good quality names that do well no matter what's happening?
Yeah, the energy companies are really going to do well. I mean, there's this renaissance in America is just fantastic. We're producing a lot more oil and natural gas than we ever were before. We're becoming a major oil-producing nation, and that is a real change from where we were 5 years ago. Things have dramatically shifted, and the balance of power around the world has dramatically shifted. No longer do we need to care maybe quite as much politically, and you're seeing some of that as far as what goes on in the Middle East. We're pulling out our troops, and partly because maybe America's tired of war, but also, you know, the shift in energy is a big part of what happens in the Middle East and what's happening here in America.
Let me take this to Tom, and I want to shift a little bit away from energy. We're going to be talking about that the whole hour because of what's happening in Iraq. But you like small cap companies. I'm curious why that is, because the Russell 2000 is down year to date and hasn't even been able to keep up with the performance we've seen of larger cap companies.
Yeah, well, absolutely, Adam, it is. And this is another reason why to maybe consider it. We're in a slow and steady economic recovery here, and it's usually during these times that small caps outperform large caps, like they have in the past 3 years. So use that as an opportunity to get in. Valuations are are there as well. And again, there's some good ETFs, value-oriented ETFs at Vanguard that can get you some representation there. But one more opportunity in energy is the Market Vectors Russia ETF. While all the spotlight's on Iraq right now, not on Russia, the valuations there is somewhere in the 6 PE ratio.
What's
so
that ticker,
Russia's been
Tom?
coming back.
What's that ticker?
RSX. RSX.
Oh, we've showed that often, yeah. I mean, again, another risky area, but why not, right? I mean, get the risk, get the reward. Chris, I need to talk to you about treasuries. To see the yield under 2.6% for the 10-year, what do you interpret from that, especially when we've had some pretty significant turmoil today in Iraq? The insurgents are within 17 miles of Baghdad. They've already taken Mosul and Kirkuk, Tikrit. Lots of these names are in question, and we have 3 plane loads of Americans in the last hour who are being evacuated.
Yep. Liz, you hit it right on the head. That 2.6% level in the 10-year yield has really been an area of support. But now that we're below it, in trading, that now is going to act as an area of resistance. If news continues to come out of Iraq, you're going to see the moves like happened in gold today, up over 1%. So you're going to have a risk-off situation. Yields are going to continue to go down. And to refer to your guest previously, I would absolutely stay out of airlines right now. This is not a time to buy in. You had such a run-up in names like Delta, over 100% up on the year. They have high beta, high momentum, 1.6% to 1% in the underlying S&P equities. That is not a time to get in. If things are going to go up in oil right now, stay out of airlines.
Okay. Although we've been watching those, they've done well at least over the last year and a half. Good to see all of you. Tom Lydon, Randy Warren, Chris, stay there. We're going to come back to you shortly for the S&P futures close.